So I keep hearing that NIO is on the wrong path and they should actually follow in Tesla's footsteps in order to become successful. Meaning, for example, less models, don't do battery swap, all of this stuff. We've heard these arguments countless times, and if you're following this channel, you know my own perspectives and why I actually think that NIO and Tesla are fundamentally very different companies. But let's make it for a sake of comparison and see where NIO is at currently and in comparison to where Tesla has been 5 years ago. And I'm just showing you a tweet that I've just sent out. By the way, please go and follow me on Twitter _mm85 and feel free to reshare and spread the news. Basically, what I've done here is I've looked into the Q4 of 2017 by Tesla, because this is a quarter where they actually delivered a similar amount in comparison to Q3 2022. So back then, Tesla has delivered 29,870 vehicles. And in Q3, NIO delivered 31,607, so slightly higher than Tesla's. So I would say this is a very comparable quarter, right? And during that quarter, 5 years ago, Tesla was losing $675 million. And they had $3.3 billion in cash. Now, if we compare it to NIO, in the same quarter, in their Q3 that was just reported, and I've covered it here on my channel, they have lost $577 million. And this was really a record for spending in R&D and such. So I've pointed out where this money was going, and basically it left them with $7.2 billion in cash. So you can see those situations are actually quite comparable in terms of the vehicles delivered. And then notably, NIO, despite delivering slightly more vehicles in that quarter, was actually losing less money than Tesla. So back then, I was already invested in Tesla. And of course, I held onto my shares because I believed in the company and the vision. And that was actually before Model 3. So everyone knows what happened afterwards. Tesla went almost bankrupt. As you saw there, they only had 3.3 billion in cash reserves and not a very high volume car ready yet. And so, I went through those times. It wasn't easy to be a shareholder of Tesla back then, frankly. However, I was luckily very rewarded. And now the arguments out there are that, NIO is losing too much money or investing in the wrong stuff like battery swap stations or in too many models. Then I return the question and wondering, if they still do all of this stuff like NIO houses, battery swap stations, investing more money in new models, and still have less of a net loss than Tesla back then at the same point in time, 5 years back, then what's actually wrong with them or in comparison to Tesla? Would you have held onto your Tesla shares back then? Most likely not. So, it's always a risk-reward thing, and it's nowhere certain that NIO will survive and actually, create the same success story as Tesla. As I've mentioned countless times here, I actually do think those companies are very, very different, but if you want to compare it, then let's compare it. And I do not see on the fundamentals a big difference there. And rather, actually, the argument here why NIO can pull up all of these things despite investing heavily into such expenses, marketing expenses like the NIO houses, which are fitting to their business model and what they are striving out to create there, and still losing less than Tesla back then. And then with double the cash cushion there, shouldn't NIO's chances be at least double as high to survive and actually become profitable, given those financials? So for me, that's why I think there are big misunderstandings about where NIO is aligning their cash. They have less operational expenses because they're not owning their factories. I personally think that's a smart move because it allows them to spend the money elsewhere. Of course, if you think owning your factory is the only way how you can succeed, then possibly NIO is not for you. However, I do think that this might be a very interesting model going forward, actually even in desperate times of an economic crisis. When you don't own the factories, you also don't have the expenses for the factories. Let's assume that there is not much more demand in the future. Could be happening, right? We don't know. We may go in a very serious global recession. Who knows? However, China has already also been a little bit in the front of going into a economic downturn here. So maybe it's China first in, China first out. We'll see, and we'll certainly see whether or not NIO can actually pull off this hockey stick like Tesla did and show exponential growth in the future, as well as breaking even, how the management has actually outlined during the earnings call. Again, maybe with the first quarter in 2023. And who knows when will be a full year of break even. But certainly with those financials similar or even better than Tesla's, the story should be continuing. That's my take for now. Thank you guys for watching. See you in the next one.